Stallion Uranium is a company that has the right people in place. We've got a team behind us that have had a lot of success in the Athabasca Basin. They founded and sold Hathor Exploration to Rio Tinto for $650 million. Foundational assets into NextGen, foundational assets into Atha Energy. A lot of success in the Athabasca Basin. But our strategy with that team has been to go big. We've got 3,000 square kilometers in the Athabasca Basin. It's to start exploring it effectively and efficiently. We've done that on a regional level right now. We're just progressing to the point where we're going to be drill testing the highest priority targets. So it's going to be an exciting year ahead. It's been building, but we're really looking forward to the year ahead. Yes, this morning we just signed an LOI with a new company coming to the basin that's going to divest of our East Basin projects. Again, these are great projects, but with Stallions focused on the southwestern basin where we hold our largest exploration land package, the East Basin projects just weren't getting the attention from us that we deserved or that they deserved. So we're able to get some cash coming in the door. We're going to see these projects progress, and we're going to have about a 10% ownership of this new company that's able to bring them forward. And most importantly, in this environment, getting the work done on them that needs to get done and giving ourselves that even more opportunity on the upside without having to manage those projects ourselves. Yes, we've got the largest exploration land package in the Southwest Basin. So this is neighboring NextGen, Cameco, Orano, F3 Uranium with their recent ultra-high-grade discovery. So this is the biggest exploration package in that area. It's the area that we think is underexplored and really resembles what the East Basin was in the late 70s into the early 80s. And that's because we're trying to find the next Cigar Lake, the next McArthur River. So we're a little deeper, we're a little into the basin, but that's where we think these monster deposits can be found. And we're doing that work very efficiently and very effectively to bring this big land package to the point where we can drill test the targets that we think give us the highest priority of making those discoveries. Yes, we've been very busy through the last year with geophysics. We're currently concluding an on-the-ground survey of our high target Athabasca target. That's going to be getting ready for drilling at the end of February, so that's going to be a significant milestone for the company, a maiden drill program. Always the potential to significantly re-rate an exploration company on the drill bit, especially with the commodity price at $105 per pound in the uranium sector right now. And at the same time, we're also looking to conclude a big regional survey over our Atha joint venture project, 220,000 hectares that we're covering right now. So an absolutely massive package that's going to give us even more priority targets to develop as we go through the summer. So our next 6 to 9 months are going to be that drill program that we have on our key Appaloosa target, as well as bringing up 3 or 4 other targets to that drill ready stage as we go into the next drill season. Right now, it's a very supply-constrained market, and already this year we've had Kazatomprom, one of the largest uranium producers in the world, show that they're not able to ramp up production like they thought they were going to. That's a significant cap on, the bear thesis where the uranium market was always Kazatomprom can just turn the taps on, so to speak. That tap cannot get turned on within the next couple of years for sure. We've got Cameco as well producing in the basin. Also wasn't able to ramp up their 2023 production. They fell about 3 million pounds short. We'll have to see what their guidance for 2024 is. But those are the 2 companies producing the most uranium in the world, and they can't ramp up production. And on the demand side, we have demand that is growing. So when we don't have that supply that can become available, what little supply is left out there is becoming more and more expensive. And that's where I think as we go into 2024, we could really see a significant move higher, even though we've already seen a significant move in uranium prices. The fundamentals just continue to point to even higher prices in a very supply-constrained market. We're incredibly fortunate in Canada to be endowed with the resources that we have, and the Athabasca Basin is an absolute star of that. We're looking at Cigar Lake, for example, it's producing at an average grade of 17% uranium. To give that a little bit of perspective, anywhere else in the world, nobody's producing above 0.5%. So it's astronomical how much higher grade these deposits are. And a little sort of rule of thumb, it's about 10 times more economic than the highest grade gold deposits that are producing right now in the world. So it's an incredibly economic commodity to be looking for. And when you find these deposits in the Athabasca Basin, they tend to be high grade and they tend to be quite large with some of the big discoveries that have been made as well. So for an exploration company like ourselves, we're incredibly fortunate because the ability to potentially find one of these, and especially our strategy of going after the really big deposits that are a little deeper in the basin, the economic upside could be absolutely phenomenal. I mean, we've seen NextGen turn into a $5.5 billion company on the back of the Arrow deposit. You know, we think that potential is there. 10 years ago, NextGen was a 20-cent exploration company. Look at where they are today, over $10. That's the story. That's the potential that we have in the Athabasca Basin. We've really stepped into the western side. So the Southwest Basin is our big playground. We've stepped in, created the largest land package in the area. And by starting large with over 3,000 square kilometers, we've given ourselves a lot of shots on net, a lot of opportunities to have very high priority target zones. And as we do that work that I was talking about, the efficient, large exploration project or survey programs, we're able to be pragmatic, pick the best target zones that we think provide the best probability of making a discovery, but also making a very large discovery. So getting the best chances that we can from a very large area rather than starting smaller and looking for the target areas there. So it's been a strategy that we've developed right from the very beginning. We stepped into the basin, we're aggressive over a year and a half ago when uranium was $40 a pound. That allowed us to build out this large exploration package that, quite frankly, just would not be able to get accomplished today. The Athabasca is a very competitive space, and the staking there, as we're seeing in news flow, is getting more and more competitive. So for us, it's about the size, being able to have the best potential target areas and following those up and moving them towards drill testing. Stallion Uranium offers an absolutely incredible upside opportunity for the uranium market. We're systematically moving a very large project forward, being able to give ourselves very high priority targets to go after. The mention that I will say, and again, with all the hype around uranium, we still hold two tremendous gold assets. We're working on those to have those get them advanced, not within the Stallion structure, but still allowing our shareholders to have significant upside. So we're in some discussions on those gold assets. We think there will be a way to create a lot of value for our shareholders there that we're not seeing any value for in the market right now. So if we're able to close that transaction in the coming couple of months, then our uranium valuation is that much lower, and I think we become one of the most compelling uranium companies in the Athabasca Basin that's working on such a large exploration project.